Welcome back to Investing Talk podcast. Today, we are zeroing in on a company that, well, really defines critical materials for the Western world, MP Materials. They're the only scaled rare earth oxide producer over here. And our goal today really is to tackle one big question. We've got the latest Q2 2025 filings, analyst reports, all the recent news. So, is MP Materials a good time to buy now? I mean, the momentum has been incredible, but does it hold up?
Exactly. We need to figure out if MP Materials has, fundamentally shifted. Is it just a commodity play anymore or something more strategic?
Yeah.
We'll look at these government partnerships, dig into their competitive advantages, their moat, so to speak, and check out the technicals, see what might be coming next.
Okay, but before we really jump in, just a quick reminder, please subscribe, like the show, and definitely leave a comment below. And hey, if there's a company you want us to analyze next time, drop the name in the comments. We'll add it to our list.
All right, let's cut straight to it, because this is really what changed the game, changed the whole valuation model, I think. The sources we looked at confirmed that policy, not just market demand, has massively accelerated MP Materials' strategic value, especially, these last 3 months, May, June, July 2025. The market is almost pricing this like a sovereign security asset now.
That's a really key distinction, and the biggest proof of that, it has to be that July announcement, right? The partnership with the U.S. Department of Defense, the DoD. That was huge, way beyond just a standard government contract.
Oh, absolutely. It's a multi-billion-dollar deal, public-private partnership, and the goal to build this 10X facility. And what's critical is the focus. Domestic rare earth magnet manufacturing. So the whole supply chain, not just, digging stuff out of the ground. The market saw that shift instantly. Stock jumped, what was it, nearly 47% after the news broke?
47% in one go.
Oh, wow.
That's massive. And you saw the analysts react immediately. CFRA, for example, they bumped their price target up to $44. That kind of move suggests the market really believes the company's long-term revenue is almost, well, government-backed now.
And you can see this coming, sort of. Earlier, back in June 2025, the company made a very clear strategic pivot. They halted their rare earth concentrate sales to China, cited tariffs, the push for domestic supply chains. It was a big signal.
Okay, strategically, that makes sense. Prioritize the U.S. supply chain. But wow, that takes serious money, right? They pulled in, what, $1 billion in commercial debt for expansion? That sounds pretty risky for a company that's usually seen as cyclical. Did they get any quick validation for taking on that kind of debt?
They did, actually. Just before that, in May, we saw some major blue chip validation. Apple announced this $500 million multi-year expansion of their U.S. rare earths supply chain. And they specifically mentioned MP Materials as a key partner. It basically says, look, we need this stuff for our U.S. tech. So it validates the private sector need, too, balancing out the government side a bit. All right, let's shift to the fundamentals. Q2 2025 numbers. They kind of reflect this early phase of the shift. Revenue nearly doubled year over year, came in at $57.4 million. And they hit record production of NdPr oxide, that's neodymium, and praseodymium, the really key stuff for high-power magnets in EVs and defense. That was up 119% year over year, 597 metric tons.
Hold on, 597 tons. That's impressive growth, yeah. But the bottom line, they narrowed the adjusted net loss to $21.37 million. Still a loss, though, right? Improved from $28 million last year, sure, but they're still losing money while spending billions on these huge projects. How does that square with Wall Street thinking revenue is going to hit like $1.42 billion by 2029? That's a huge leap.
Yeah, it's a fair point. That aggressive forecast, it hinges completely on execution, on them actually ramping up these new facilities successfully. That's why the street is buying the future story, not the current P&L. Management's target is to scale up that refined NdPr output from about 6,000 tons, aiming for potentially 9,000 tons by 2026. If they hit those kinds of numbers, then yeah, the consensus forecast for positive adjusted EPS by 2026 starts to look achievable. Those current losses could flip to serious profits pretty quickly.
Okay, so the investment thesis is basically a bet on them building this stuff out and the fact that demand seems pretty locked in from these big players. What about the balance sheet? Can it support that bet?
The balance sheet actually looks pretty resilient, which is crucial here. They've got decent liquidity cash and equivalents around $629.4 million, and long-term debt is surprisingly low for this kind of heavy industry expansion, just $57.8 million. So they're not dangerously leveraged for this transformation they're undertaking.
And we definitely need to talk about that $400 million preferred equity investment from the DoD. That's different from a regular loan, isn't it? Sounds more like the government taking a strategic stake.
Exactly right. It helps with liquidity, sure. But the really critical thing is that it acts like a protective floor. Think of it as government insurance almost. The DoD is basically guaranteeing demand, saying, we need this material for national security and we'll pay a fair price, even if the global commodity market takes a dive.
Mhm.
That really insulates MP materials from the worst of those commodity price swings that usually hammer mining stocks.
That protective floor. That really is their competitive moat, isn't it? Plus the fact that they're the only scaled producer like this in the West, and running that whole integrated mine-to-magnet operation, it's just incredibly hard for anyone else to copy. The capital, the regulations, the tech know-how, huge barriers to entry.
Okay, so given this mix of policy support and fundamental potential, timing becomes really important, and the next 3 months look absolutely packed with potential catalysts, events that could really move the stock.
Yeah, we've got a pretty clear timeline laid out here. July 31st was Q2 earnings that kind of set the stage, got people talking about how well they're executing on these partnerships. Coming up really soon, August 15th. That's when we might see them added to or maybe rebalanced within some key clean energy ETFs. Index inclusion like that often forces buying, adds some volatility.
Then you've got September 17th. That's when the big institutions have to file their Q3 holdings publicly. If we see some major new hedge funds or asset managers taking big stakes after that DoD deal was announced, that's huge validation for the market. And then the really big one, probably October 29th, Q3 2025 earnings, plus a crucial update on how that facility expansion is going. Lots of anticipation around that.
Right, those are the scheduled things. But
Yeah.
there's also, well, market chatter, right? Rumors flying around. Are any of those strong enough to actually factor in?
Well, they definitely add to the speculative buzz and potential upside.
Yeah.
You're hearing whispers about maybe more strategic government orders for defense stockpiling beyond what's already been announced. That would signal ongoing reliable demand.
And I've heard buzz about talks with a big European automaker, maybe an EV company, for an exclusive magnet supply deal. That would be massive for diversifying beyond just Apple and GM. Plus, any hints that the Texas magnet facility might come online early, that would definitely accelerate the whole timeline investors are watching.
Now, looking at the chart, the technical picture, as of, say, late October 2025, the stock's run has been, frankly, incredible, up over 380% year-to-date. It's a confirmed parabolic move. It's trading pretty strongly in that 76 to 81 LR range, closed around $82.90
I
recently.
think that after a run like that, you need to see support hold. Where's the key technical level we should be watching right now?
Yeah, good question. Strong support seems pretty well defined down near $70. That was the big breakout level right after the DoD news hit in July. Overhead, the resistance is clearly the 52-week high, up around $100.25. Importantly, the stock is staying comfortably above its rising 50-day and 200-day moving averages. That's, textbook definition of a strong, sustained uptrend.
And momentum. Is it looking stretched or still healthy?
Looks pretty healthy, actually. The RSI, the Relative Strength Index, is sitting in that kind of 55-65 zone. That suggests there's still room for accumulation. It's not technically overbought yet. So maybe it has room to run towards that $100 resistance, perhaps ahead of that Q3 earnings update.
Okay, so lots of positives, lots of strategic backing. But we need balance. What are the big risks here? What could actually derail this story?
The number one risk, I think we touched on it, is execution risk. Simple as that. Building these huge, complex facilities like the magnetics plant in Fort Worth on time, on budget, hitting those government contract milestones. It's incredibly difficult. Any serious delays or failures there, that could absolutely crush investor sentiment no matter how strategically important the company is.
Makes sense. And what about relying on just a few big customers? You mentioned GM, Apple, the DoD. Great customers to have, sure, but that's concentration risk, right? If any one of them changes their plans or runs into trouble, that could hit MP Materials disproportionately hard.
That's definitely a factor. And finally, there's still market risk. At the end of the day, they are dealing with rare earth commodities, and those prices can be volatile. Now, like we said, that risk is lessened quite a bit by these long-term contracts, and the government essentially setting a price floor. It guarantees a certain level of profitability, even if global prices swing wildly. But it doesn't eliminate the risk entirely.
Right. So, pulling back to the longer-term view then, why does the investment horizon still look attractive over, say, the next few years? What are the big structural tailwinds?
Well, looking ahead, it's really about scaling up that heavy rare earth refining capability. They're targeting 2026 for that. If they achieve that, they become pretty much the only non-China option for some of the most critical materials needed for advanced tech. That should drive even more global demand from industries and governments, and the underlying drivers aren't going anywhere. The massive growth in EVs, the hardware needed for AI, the huge geopolitical push for secure domestic supply chains, those trends are only accelerating. So putting it all together, the sources point to a pretty compelling investment thesis right now. You've got strong fundamentals, really strong technical momentum, these incredible strategic moats thanks to government policy and blue-chip partners. And then you have multiple near-term catalysts stacked up just in the next quarter or so. It looks attractive for potentially aggressive short-term plays, trying to capture those upcoming events, but also for long-term investors who want to ride that multi-year shift in global supply chain power.
That structural shift really does feel like the core of it. And maybe here's a final thought for you, the listener, to chew on as you think about all this. Given that the DoD is now basically the biggest shareholder, and the U.S. government is effectively guaranteeing demand and providing a price floor with that preferred equity in the contracts, does that fundamentally change how you should even value a company like MP Materials? Is it still just a commodity stock? Or is it something else entirely now, with a kind of institutional safety net that traditional mining companies just don't have? Something to consider.
That's a really profound question. Definitely worth thinking about. Thanks for tuning in and exploring the sources with us today.
We'll catch you next time on Invest and Talk podcast.